So glad you could join us here on a Tuesday. I'm Marlon Bowling with you, watching your ag commodity trade. We're going to focus on our grain market on this particular segment. We're going to bring in Rich Nelson of Allendale Incorporated, and he is based in McHenry, Illinois. Rich, thanks for joining us here today. One thing I wanted to visit with you about was some information you had posted earlier regarding some big record imports by China. Talk about that.
You know, in the past few weeks, we've heard this discussion about maybe some boatloads of previously ordered product being actually canceled or more likely actually resold to some other buyers in different countries. That obviously would be a little bearish here for us, but the reason why we're having this discussion is exactly what you mentioned here. For the month of July, we had over 10 million tons of soybeans, and these are mostly Brazilian-oriented soybeans right now, going to China. And this was a record import, a full 30% over last year in the same month. And in terms of the whole numbers, they brought in about 12% more beans so far since the start of their marketing year back in October. To meet USDA's goal, 91 million tons, we can run about 5% under last year for the next few months.
Right now, the soybean trade is about 5 to 6 higher. As we look at the live quotes direct from Chicago here, we have the September contract 5 1/4 higher, 969 1/4, and we have November up 6 at 975 3/4. Now on the soy products, we can take a look there as well, see what the soy meal and soy oil markets are doing today. September soy meal currently 80 cents higher at 310.70 per ton, and on the oil, here we have the soy oil trade on September, now 36 points higher at 33.94. So definitely higher across the triangle there in the soybean complex today. But you were talking about so much of that demand or the shipping of soybeans to China has come from Brazil. At what point are they going to run out?
And that's going to be an issue here for us. They probably will swamp a little bit of what should be the restart of our portion of the export market here in the next few months. So they will continue to be maybe a thorn in our side, more to, so to speak, here on this new crop soybean export discussion. And we can probably expect that to last maybe through the first couple weeks of September. So we will be delayed in the start of our dominance of the export season. But at this point, I'm not quite sure exactly how much to take off regarding our expectation for new crop exports. Right now, we've taken off 100 million bushels compared with USDA. Maybe that's a little too much, maybe too little, but we'll see what happens here.
All right, let's visit the corn market here. And the corn actually opened up, maybe steadied firmer, and then it kind of had the wheels come off a little bit. But we're bouncing off of our lows of the day now. September down 2.5, 369 3/4 is our last trade, a penny and a half off of our low now. And December, the new crop month, down 2 3/4 at 384. Same story there, a penny and a half off of its earlier low. Do you think this market's going to be fairly flat as we get toward that Thursday report?
I've got to say so. You know, and everybody's pointing out that, yes, we're going to have this first cut on U.S. corn yields, but perhaps yesterday, or this morning's discussion on the crop progress numbers maybe changing some minds. You know, we did talk about the numbers certainly on the soybean side, where North Dakota and South Dakota had a pretty large jump here that we weren't expecting. Maybe the same story for corn. A lot of producers saying maybe these past couple weeks of rain have at least stopped the damage, and maybe we're not going to talk about this 160 yield number anymore here. So we'll see what happens.
Let's take a look at the wheat, and on the Chicago wheat, had an about face go on there. We're 11 cents off our earlier high now, and September down 6.5 at 457. Kansas City also had a sell-off. We have the September down 5 3/4 now at 461. That's over a dime off of its high of the day so far. And on the Minneapolis wheat trade right now, you have your September trading 2 1/4 higher at 728 3/4. And on the cotton market, we have December currently trading 39 points higher at 70.94. It did get up above 71 cents momentarily. So that's a look at our crop markets. We'll come back and talk more with Rich, this time about our livestock trade when we come back. Let's resume our conversation with Rich Nelson of Allendale Incorporated in McHenry, Illinois. And Rich, as we take a look at our livestock trade, we talked about some import data for China, where they have been importing a phenomenal amount of soybeans here recently. We also had some USDA numbers that came out regarding the export of beef out of the U.S. Over a month-long period. Explain those numbers.
So each week on Thursday, we're always talking about these weekly export sales numbers, and they don't actually tell the whole story, only carcass data on meats. And it's actually kind of important for us to watch the whole meat export issue, because a lot of our meats to Asia are actually organ-based trade. Now, as far as USDA's numbers, every month they release, some numbers. They're a little dated here, but the most accurate we have for the month of June was just released. 239 million pounds of beef was exported in June. That's pretty strong, about 12% over last year. As far as the import side, though, we actually were a little surprised. Very strong imports, 295 million pounds. 4% over last year. It's kind of a confusing issue for us because these were ordered a few weeks before June, and obviously during that time we had very high beef prices. So in the trade's mindset, we actually had some lower import numbers, but maybe a little confusing issue for the trade here.
Well, let's look at our futures board right now, and on the live cattle trade and for the feeder cattle market as well. Of course, we had a tough day yesterday. Right now, we're trying to rebound a little bit on the live cattle market. The nearbys are a little firmer. The deferred's a little weaker, so some mixed action taking place right now. August live cattle currently 33 higher at 113.08, although they are apparently in delivery mode here. We have October 10 higher at 111.22. And December up 28 right now at 113.08. So it's back off of its earlier low by almost a full $1 right now, getting closer to the highs of the day. The feeder cattle trade, as we look over there, we now have the nearby August contract back to unchanged. 146.25 is where it wrapped up yesterday. September down 13 at 146.97, and October down 32 right now at 145.88. So we're almost $1 off our earlier lows. Why that sell-off here a little bit ago?
I think the trade's still having these questions about actual show list, what we'll be seeing this week and what will be offered. Of course, yesterday we had that surprising drop in the offer in the show list numbers here, the number of cattle which will be offered to packers. But it didn't make sense because last week's free market cash cattle sales were actually kind of low. Only 79,000 head. We're still discussing this potential 20,000 head discrepancy of numbers that should have been sold versus actually what was. So I think in the trade's viewpoint, certainly for today's discussion as well, we're having all these questions about what will be seen on the show list numbers or not, and not just what was offered by the cattle feeders this week.
All right, and a look at our lean hog trade will show that we have the August up 38 and October now up 66 at 68.78, and that is getting up there within 12 cents of its high of the day. December up 58 cents right now at 63.08. Rich, thank you so much. Always good to visit with you. I appreciate it. Rich Nelson of Allendale Incorporated in McHenry, Illinois.
All right. Well, thank you, gentlemen, once again for all the insight.